We're living in tough economic times at the moment with inflation, interest rates, cost of living pressures. But despite all that, last month the latest data shows house prices actually went up a little bit. So why is that? Well, economists believe it might be because prospective buyers are feeling a little bit optimistic about the prospect of interest rate cuts later this year. As well as that, the current supply of houses and apartments isn't enough to meet demand. The CoreLogic data shows nationally housing values went up by 0.6% in February, and all capital cities saw a rise except Hobart, which fell by 0.3%. Perth saw the greatest increase of 1.8%, Sydney was up 0.5%, and here in Melbourne, house and unit values went up by 0.1% last month.
It looks like the housing market has actually avoided a cyclical downswing. That's where it looked like the market was going at the end of last year. But off the back of a bit of an uptick in consumer sentiment, the prospect of a rate reduction and continued high levels of migration, it looks like the market has avoided that, and we could continue to see a bit of an uptick in the following months.
But there are competing economic forces at play, so that uptick isn't guaranteed. With rising unemployment, higher interest rates and lower household savings, making it tougher for people to buy a house. So the year ahead in the property market is anything but certain.